All right, guys, Chris here, and today I know I already made a video about this, but I'm just gonna dig a lot deeper on how to treat 30-year mortgage, service finance, and rent-to-own customers. For those of you who don't know, these are our three types of finance options. Let's start with rent-to-own. Rent-to-own is only up to $35,000, and it's a no credit check system. That is, you're approved, and you are approved. That's exactly what it means, guys. Now, here are some things to consider. You cannot get a finished out home on rent to own. What does this mean for a customer? For the customer, it means that they most likely could just acquire a shell, or maybe a shell with some finished work, including electric, plumbing, and framing, which I've seen been the most common with rent to own. Now, with rent to own, it's very simple. All you need is a name, an address. You need a valid bank account, license, and 2 references with their phone numbers. With rent-to-own customers, what I've realized is you have to move quick. If someone is looking at rent-to-own, you have to attempt to try to close them then and there or the following days, because they're probably looking at 6 or 7 other places getting multiple quotes. All right, guys, number 2 is gonna be service finance, okay? This is my favorite one, and it's a property improvement loan. Therefore, it has to improve an existing structure on your property. What does this mean for the homeowner? It means that if it's raw land, they cannot use it to buy one of our homes. But if it's an addition, hence the property improvement loan, you can absolutely get this loan. If they have a barn, if they have a fifth wheel, a camper, an old mobile home, or a primary home, they can apply for this loan. With this loan, they look at 3 major things: your income, your debt, and your credit score. Okay, listen, I mentioned in the other video that service finance is only up to $100,000 with some exceptions. But you may ask, what credit scores can really get approved for $100,000? Now, here's the truth, and I'm not gonna sugarcoat it. What I've seen is nobody under a 750 to 780 gets approved for up to $100,000. Now, what do you do if your customer has great income but a low credit score? You need to ask the customer, Mr. Customer, the 3 closest people in your life, would any of them be willing to finance? Whether that's your mom, your dad, a grandpa, grandma. And what I've seen happen is the primary signer has good income but low credit score, and the co-applicant has low income but a high credit score. Now, they went from getting approved from $30,000 to $100,000 in a snap. So guys, listen, although service finance is more complicated, you do have to get creative, because this is a quick and easy loan that will help you close so many deals. Something else to take into consideration with service finance. Service finance can only work effectively in its residential land. No commercial and no farmland. But wait, I have seen some commercial land get approved, but only up to $40,000. No matter how good your credit score is, or no matter how high their income is, if it's on farmland or commercial land, their approval could get cut more than half. So just take that into consideration. All right, guys, and last thing, we have our 30-year mortgage. Guys, this is a huge tool. Now, I'm gonna be honest with you. Our 30-year mortgage is a one-time close. Now, what does this mean? It means, number 1, the customer has to give the down payment, they have to get their quote, and then they have to wait until closing until we start building their home. What does this mean? If a customer applies and the application process is just like any regular 30-year mortgage, W-2, pay stubs, proof of work, all of that. But what this means is once the customer gets pre-approved is not when we start building. We start building until their pre-approval goes to closing and they sign on a dotted line and have given the full down payment. Guys, for the 30-year mortgage, which is pretty cool, you require a lot to be tied into the loan. Now, what do I mean? They cannot just 30-year mortgage the house. They have to put septic, electric pole, electric hookups and septic hookups, water well if applicable, and your skirting. But wait, they also have to add concrete pad, and we have an option to add decking and porching onto the loan. It's amazing, guys. They can literally have an all-in-one loan. right? So what this allows a customer to do is, in theory, they can develop a raw piece of land and have a perfectly good home sitting there within a matter of months. All right, guys, I just broke down our 3 financing options that we most use. Hopefully this video was helpful, and I can't wait to see you close deals. Rent to own up to $35,000, service finance up to $100,000 with exceptions for highly qualified customers, and our 30-year mortgage. Thank you so much for watching.